Well, it'll be another couple of weeks before we get the new housing data, but could a repeat of July's numbers indicate a hard landing for housing? Our next guest doesn't think so. In fact, he still is recommending adjustable rate mortgages to some of his clients. John Sauro is president of North Atlantic Mortgage, and he is joining us from Stamford, Connecticut today. So we welcome him to Market Movers. John, you're pretty confident that there will be a soft landing in the housing market. What's in place that you think will make that true?
Well, Monica, I think what we're seeing now is we're seeing a market that is going back to normal levels prior to the run-up in real estate prices in the previous few years. I think you have a lot of folks out there in the last few months touting the fact that the real estate market is overdone and they're expecting a crash and a burst of the bubble. And I like to reference that to Chicken Little. The sky is not falling. The real estate market has been good, it's been healthy, but to sustain the levels of the market prices that we had over the last few years, it just wasn't going to happen. And if that did happen, then we probably would have had a bubble and then we'd have some problems. But the market has corrected itself, and it now has a strong underlying base for the economy, and I think that's a good thing.
Have we seen the bottom, though? I mean, you say corrected itself. Do we have still some more correction to go here?
Well, I think in certain areas of the country you might. There are certain areas that were hotter than other areas. It's kind of like the weather. You know, you have some very cold areas in the market and some very hot areas in the marketplace. So some might have some more correction coming up upon us. However, you know, with that said, I think what we're looking at here is we're looking back at, we're looking at going back to the levels of a healthy 6 to 7% appreciation year, which was normal before the run-up in prices had taken place.
Well, let me ask you about your suggestion that people should still be looking at adjustable rate mortgages. And I'm wondering how that compares when we did have prices that were sometimes even 20% above, market value, and people were buying maybe more house than they could have afforded without an adjustable rate mortgage. What's your suggestion there about they continue to do that now? Why?
Well, my suggestion with that is no one mortgage is going to be right for everybody. You obviously want to consult with a professional and find out what's going to be best for your situation based on lots of different factors. The reason why certain adjustable rate mortgages might be advisable right now is if you are in the belief that mortgage rates will ratchet down, which we believe and some other experts believe that that's going to happen around the first quarter of '07. And if you believe in that, then if you were locked into a fixed rate mortgage currently, then you're not going to be able to ride the wave back down when the interest rates fall next spring and further on. So a product like a monthly adjustable affords you that benefit of being able to realize the rates dropping on your mortgage as the rates drop within the market. And that's one of the reasons why we might recommend that to a client. But again, there are many different factors that you want to weigh on that. It's not necessarily the right mortgage for every client, and you really want to assess that properly.
But with rates having gone up, do you see more people moving from those adjustable rate mortgages into the fixed mortgages now? Is that what you're experiencing in your business?
I think that you're seeing that a little bit across the board, because I think there's a general fear out there that when rates move up, obviously there's a psychology there, that as those rates move up, that people are fearful that they're going to continue to go up, and so they're going to want to lock in and protect themselves. However, with that said, let's be mindful of the fact that we're probably at the peak of the market right now as far as interest rates go. And do you really want to lock in at the top of the market, or do you want to take a little bit of risk and gamble on the fact that those rates may come down?
Okay, John, we have to leave it there. We're running out of time. Thank you, though. Appreciate your time today, John Sauro.
Thank you, Monica.
President of North Atlantic Mortgage Corporation.